Hello everyone, how's it going? In this video, we will cover the stock Cosmos Health, trading under the ticker symbol COSM. The market has been volatile recently with many equities up and down. Many people are interested in Cosmos Health because of the short squeeze potential, and in this video, we will take a look at the stock from a technical and fundamental perspectives and determine what could be a recommended course of action to carry out Cosmos Health. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description below, as every help is greatly appreciated. At the moment, Cosmos has been doing very well, currently testing the $7 level once again, after a few days of significant price takeoffs. Over the past few days, the stock went up by more than 40%, and upward momentum was well kept. When we move on to the 30 days tendency, Cosmos Health has been bouncing back from the previous selling phase, and the momentum suggests that there may be some pullbacks ahead. The price action of Cosmos has been going on a lot of ups and downs. Despite some clear attempts to go higher, they have all failed until very recently. The breakthrough is therefore confirmed nevertheless, and we have now collectively decided that the best way to go is up. I believe that the current momentum could be a decent entry point, assuming that there will still be a lot of short-term volatilities and that they will all be in favor of our position. Cosmos Health is an international healthcare group that is based in Chicago, selling nutraceuticals with two product lines, Sky Premium and Mediterranean. It also commercializes generic medications. The company has a presence in Europe, Middle East, and North America. It has an emphasis on nutraceutical research, development, and commercialization due to the low-risk profiles and clear regulations in the sector. It's worth mentioning that nowadays the management believes that the stock has solvency or going concern issues, putting its future into jeopardy. The management has mentioned that due to recurring losses, there has to be an injection of capital either by selling or diluting the equity, issuing more debts, or to refinance the debts. In other words, they need to either borrow money, sell the company for more money, or to go into something like Chapter 11. Ultimately, it seems like the company has currently chosen the road of selling the equity, taking advantage of the recent renewed interest that retail investors have in Cosmos Health. The long-term price action has been plagued by poor results, as well as the piling up of short orders, which caused the price to plummet for a period of time. For the period between August and November 2022, the stock price declined by more than 83% before the recoveries. Over the past few years, it regularly traded in the high tens or low three digits. Of course, the whole situation from a technical perspective gives us a sentiment that this is a very good opportunity to buy. But I believe that we now evolve in a different environment and that we have now to deal with the fact that this stock is currently playing for its survival and that the most challenging is still ahead of us. When we look at the company's profitability, it's obvious to see that things have been on the stagnant side, with both the revenue and gross margin as well as the net income having a hard time growing, while the operating expenses are not diminishing. This means that if Cosmos Health is popular with shareholders, it's certainly not because of its fundamental potentials, however we want to take them that way. The good news is, of course, if we want to find a positive news in all this, is that they seem to be pretty good with controlling the liabilities, between $40 to $45 million, peaking in Q4 of 2021 at $51 million. What this means is that the company is trying its best to keep things under control. Another thing that we can see is that the company's assets seem to be entirely financed by debts, with a relatively small portion of the operations financed by equity. This means that Cosmos would have a significant amount of obligatory cash outflows, and if they don't comply, the company could go liquidated. So the cash situation for Cosmos is also negative. Most of its cash inflows come from financing, in other words, asking people to trust the company by putting their money in it. Overall, the situation of Cosmos Health from a fundamental perspective doesn't look good, which might be the reason why it has a large short position placed against it. This may reinforce my feeling that COSM is a good stock for trading, but not necessarily for investing. The low cash levels would also suggest that a company can go through another round of stock dilutions or to issue more debts. Now, let's also take a look at the shareholder composition of Cosmos. According to Fintel, there is no institutional shareholder owning Cosmos Holdings. Only the retail shareholders own it. If this were true, then we're looking at a stock that's obviously fit once again for short-term swing trade. The uncertain future of Cosmos, with the going concern in jeopardy, means that the short-term outlook of the stock can be very volatile, whether it goes up or down. One key behavioral difference between institutional and retail shareholders is their horizon. Institutional shareholders tend to take longer-term view, with a focus on the company's fundamentals and growth prospects. They're also less likely to engage in short-term trading and less affected by the market volatility. They're also more likely to get involved with the corporate management and corporate governance. For example, they're more present in the corporate votes than the retail traders who are only here to scalp the gains. In fact, Cosmos Health has a massive appeal due to the potentials of a short squeeze. Short squeezes are what shareholders hope to achieve by piling in a stock that is massively shorted, forcing the short sellers to redeem their positions. They are very often compelled to do so because as long as those positions remain open, they would have to pay financing fees to brokers and also have to assume the risk of infinite loss, since the potential loss is from their entry point. And this can be infinite, since we would be calculating the losses between where the stock can go, infinite, and their entry point. In the case of Cosmos, there is a large position of shares sold against the company, taking more than 1.3 days to cover. This may mean that if the shares were redeemed, then there can be a massive spike for its share price. Overall, I believe that Cosmos shares have a significant possibility to squeeze for the short term. I'm really not sure about the long-term prospects though, and we're not really here for that. So we should remember that the short interest doesn't really guarantee a short squeeze, and that it's a metric that's worth monitoring for the investors to keep in mind that there can be a potential for such phenomenon to occur. But nevertheless, we should also remember that very often the short sellers may have valid reasons for the bearish sentiment. Based on our analysis, I would therefore recommend to start buying Cosmos shares and to hold it for around 30 to 50% of your profit target, and then liquidate that position once that target is reached. Now, I personally believe that Cosmos deserves to have a place in your portfolio, especially if your risk tolerance is considered to be high, and if the holdings are diversified enough. The best approach in this case would be to smooth out the short-term volatilities by buying in small batches over the next few weeks. I would recommend an exposure of around 1% of your portfolio in this stock.